The forex market never sleeps, and neither do I. So let's go and see what today's charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel, and I will see you on the charts. In today's video, I want to speak about NZD/JPY. Now, why do I want to speak about NZD/JPY? Because at the moment, we really have quite interesting price action and structure. So as usual, I will be providing a complete multi-time frame top-down analysis first. I will be covering the technical aspect of this market. Then we will go and check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market here has just retraced exactly to the zone, which is in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse, which is a quite strong monthly demand and support area that we did expect the market to test before then starting a rejection to the upside. We can also see that from a pattern perspective, we have the impulse and correction. So continuation to the upside, at least by looking at the monthly, seems quite likely. We go down on the weekly time frame, and what do we see? Now here in the weekly, we can see a quite strong impulse to the upside, followed once again by this correction. Now, as we said earlier, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment, also here on the weekly, is in between the 0.32 and 50% of the Fibonacci taken on the weekly impulse, which in this case, if we look left, we can see how it is aligning with this level of previous support here, against support here, against support here, which is now against support at this area, creating a quite strong structure support here that we do expect the market to reject to the upside. So both monthly and weekly at the moment seem quite bullish. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. We go down on the daily time frame, and what do we see? Now here in the daily time frame, we can see that first of all, the market had created this move to the downside. When the market was around this area, I made a full breakdown explaining all the reasons for which from here we expect the market to provide this move to the upside to go and retrace at least to this previous support turned resistance. And in fact, we can see that is exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. And when the market tested this previous support turn resistance, it failed in breaking it to the upside and just rejected it to the downside, providing a quite nice pattern. In fact, in creating this rejection to the downside, the market has also printed this M pattern. And in general, after the creation of an M pattern, you want to see the market create a move to the upside to go and complete the pattern at the previous support turned resistance. So here in the daily time frame, there is good probability for a potential rejection to the upside and completion at this previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing, we can see how lately on the JPY, net positions have been quite bearish, with minus 56k net positions and 78k shorts and only 22k longs from an institutional perspective, making the JPY quite weak, and a weak JPY is exactly what we need if we are to create this rejection to the upside. And if we go and see what we have on the NZD, we can see how the NZD has been getting stronger, shifting from a negative net positioning of minus 2.1k to a positive net positioning of 8.1k, with 2.1k shorts, longs, added with the last report, bringing it at a current 19.7k long positions and only 11k shorts from an institutional perspective. So at the moment, everything seems indicating for a potential rejection to the upside and completion at the neckline of this M pattern. So how we will be approaching this potential short-term longing opportunity here with students. Now, as usual, we will be reactive and not projective. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so the 4-hour and the other small time frames and intraday time frames. So with students, we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding nzdjpy to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at this previous support, turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description and I will see you in it.